Well, the FIG IPO is an absolute blockbuster success. It came out at $33. It spent all morning long ramping up. It looked as if it was going to open between $100 and $105. Close to the opening or the first candles that we could begin to see, it dropped down to $85. And as soon as it was presented to the market to buy and sell, it was an absolute feeding frenzy, and the price shot up to $108.42 as I'm looking at the ticker right now. This is up 358% today alone. If you got even the smallest piece of this, you've done well. If you got any of the share allocation as part of Robinhood or some of the other trading exchanges that gave folks an opportunity to get a little entry piece, you're very, very happy. But I'm going to take you into the charts, and I'm going to give you a little bit of insight as to how to get this thing after it slows down. Right now, it's just trying to grab a rocket and hold on. Well, it will slow down, and what it does after it slows down is going to tell us a lot about how high up this could go. And you say, well, Josh, you just told us it went from $33 to $108. Is this still going to be going up? I mean, it went up 355% today. How much more can it go? Well, it can absolutely go up another 100 or 200%, but it's going to give us some clues. And I'm going to go over, like I did a little bit yesterday, but with a little bit more fine-tuned focus. I'm going to go over the circle chart to show you what we're going to be watching for. It's going to be so super simple that's going to tell us whether or not FIG is going to do that additional 100, 200% move, or whether it's going to cool off. I want to share with you an important fundamental detail about how the shares were allocated. So 2/3 of the shares that were created were given to people that had been investors or part of the startup, which means it went into the hands of a lot of people who might have a high incentive to sell. So this thing is going to hit some selling pressure. There's going to be a teetering point in which it moves from frenzy to buy to frenzy to lock in profits. And so it doesn't mean that it's going to pull back and come down. I mean, just like Circle, it had a little bit of a slowdown, but then it began to pick up pace again. What I will tell you, though, is that you need to be strategic, and I'm going to go over how to trade a hot stock like this that's rocketing higher. You don't want to do what a lot of people are going to do, which is simply to buy the top and then maybe be stuck bag holding. You got to remember that Wall Street is built on the greater fool theory, which is that every single time somebody is selling a stock, he's selling it because he doesn't believe it's going higher, and he's hoping that someone will come behind him and pay him top dollar for it, and that person is believing that he's a fool to sell it and that it's absolutely going higher. So both parties thinking the other is making the wrong decision. Mostly Wall Street is just like that. It's called the greater fool theory. So I'm going to break some of that down for you guys. We've got Apple's earnings ahead. I'm going to give you a couple comments on that. The stock has really fallen back from its recent local high, and it's sitting on support, which means that if Wall Street doesn't like what they see or hear or what's rolled out this evening, it absolutely can flush from here. But it's interesting, out of everybody who covered Apple today on CNBC, every single one of the analysts said that if it flushed and it got down to 200 or sub 200, that they would double their position. And before hearing that, that was also my view yesterday, is that if it didn't go well, I have long enough dated options that I might roll them out a little further and just double my position. Because I think that Apple is absolutely doing something different right now than Meta and Microsoft. And Apple's getting punished. Meta and Microsoft is being rewarded. And that's that Meta has a huge CapEx spend for AI, right? And it seems as if Wall Street loves it, and they were able in this recent earnings to show that it was causing their profits to ramp up. And that's why people are punishing Apple, because they're sitting on so much money and they haven't invested any of it. And so the market is saying you need to get on board with it. There's the call for Tim Cook to resign and to turn the company over to what's referred to as a wartime CEO, somebody that can take action when the market's changing. Tim Cook was a great CEO when it was all about pricing strategy, but now it's about the fundamental business and a paradigm shift with AI changing everything. And he's still trying to figure everything out through pricing strategies and not through changing the business quickly, not spending money. The number one problem is he's not spending the money. They're sitting on hundreds of billions of dollars and he needs to invest it. Their current CapEx allocation is around $11 billion. And for a company like Apple, that's just chump change. So you got Meta and Microsoft have been spending close to $100 billion a year, and they're the ones getting rewarded. So we're going to find out in a couple hours what's going on with Apple. And as I said, Wall Street wants to own this. There's a ton of bets on calls going long, which means that it's possible that Wall Street doesn't want to get left behind on a potential move. Could be that they've unloaded their share position, but didn't want it to run away without them. So they bought some call options as a hedge against not owning the shares right now. That seems to be why there is such a heavy skew towards calls. It may not be because the company is absolutely going higher. It may be that they don't want to be left behind. They already sold their shares and they're taking a hedge towards the idea that it'll take off without them. So that's a little bit of thought on this because everyone is saying that if it drops, they're going to buy in. I think that Apple will figure this out. And the very minute that they've got good news, the market's going to reward them. The other big thing that's holding the company back is this whole deal with Google and this lawsuit about search. Apple gets paid a ton of money by positioning Google as their search engine, but that's in court right now. And if the judge rules against Apple and Google as a monopoly in this particular situation, then that would cost Apple $20 billion in revenue. So people are trying to figure out how that court case is going to go. And it could be that earnings isn't a big enough catalyst. Everyone's waiting to see the decision on that report. And it could be that people believe that it's not going to go in Apple's favor and that's why the stock is not going higher. And it's not until that news comes out then you'll get that pullback, and then it can move forward from there. So I have no idea what's going to happen with Apple, but I will advise you. It's something that I say all the time. If you're not comfortable in your position of risk, then just don't punish yourself, lower your position. It's better to take a step back than a major hit. Keep that in mind. This is the Stocks with Josh show. Thank you for joining me. Thank you for smashing that like. Thank you for hitting the subscribe. I'm going to go into that fig chart here in just a minute, but I want to show you another chart, which is good old Tesla. No, Tesla's not doing anything particularly exciting today, other than in my Stocks with Josh Discord, I provide daily, half an hour before the market opens, A+ trade setups. I'm going to show you the one I provided for Tesla today because these can be very easy to trade and they can be very profitable. Let me show it to you. So the trade alert that was given to the Discord this morning when the stock price was here, that if we crossed beneath 319.20, that it could come down. Now, there were some other targets in here along the way, but 313.60 was the third target of the day. And you can see that it came down and hit that. Now, it came below that. It back tested it, and then it got rejected and went even lower. Today is what I would refer to as a super easy trade day using my A+ trade setups. I provided it for Tesla, NVIDIA, and the SPY, and both Tesla and NVIDIA were very easy trades to take. Now, there's a little bit more to it. I don't want to suggest that anything on Wall Street is easy. You've got to be patient. You got to make sure that the candle closes and then opens beneath the trend line. There's a few dynamics, but this is the type of thing that I'm teaching. Now, tomorrow, I'm hoping that we get an easy day like today. I'm going to be live trading with the family, and we're going to be using these A+ trade setups to make the money. So don't miss out on it. Come join the Stocks with Josh Discord, my pro trading community, by going to my website, which is the name of the show. You just add www.stockswithjosh.com. All right, let's go look at the fig chart and see what's happening. And I'm going to compare it to Circle, because Circle in this same environment did the same thing, and it did what we want to see Fig do, which is to keep climbing over the course of the next couple of days. Let's go look at those charts. Fig ultimately opened up at around $85 and immediately rocketed higher. Now we have come up here and we've hit this 116, and this is acting as a resistance, and we have been steadily falling since. Now, here's what I want you guys to be paying attention to. I'm going to introduce you to a concept. It's called POC, and a lot of you know it, some of you don't. This means point of control. What is the most significant 2 points of control on this chart? Well, it's going to be the opening price. You do not, let me repeat, you do not want to see this drop below the opening price. You do not want to see FIG drop below the opening price because you're going to begin to see a bunch of panic sellers, people that had held off. There was a lot of people that own shares down here. There's a lot of people that own shares, and they decided they weren't going to sell at the open. They wanted to see how high this thing would go. But if it comes back beneath the opening, then they're going to perhaps begin to panic sell. So the first point of control is this $85 on the chart. The second point of control is this area that it ran up to before selling began, which is right here around $115 to $116. So now these are your most 2 important points of control on the chart. This is a baby chart. It's only been kicking it here for a couple hours, a handful of candles. But yes, we can apply candle theory to this chart. Let's jump over to Circle to get a little bit of perspective. Now, here's the Circle chart. And you can see that it did something similar. It IPO'd at around 64. To be clear, both of these initially had a day of price of closer to 30. But by the time all of the initial orders got reconciled, it opened up for active traders at double the price. Circle right around 63. You can see that actually FIG did way better up here at 85, but let's look at what happened. It still ran up. And so the biggest and most important point of control on the chart was right around 63 because that was your opening price. And then after the first couple hours, it came up and hit the 103 mark, and that became your second point of control. So these were your 2 big important numbers. Now, here's what I want to show you. At some point, this thing will cool off, okay? Could be over here on FIG. It could be that 116 is going to be the day high. We don't know yet, okay? But that right now, it's looking as if this could, for the time being, be the day high. On Circle, it was around 103. And so each candle after, it got lower and lower until after hours. And the buying began to ramp back up. Where did it ramp back up to? Very close to this point of control, 103. As soon as it got close, more selling began. But this time, there wasn't as much selling as the first day. And eventually, as it opened and crossed this very important 103, that's when it went on to make a new high and ran up to $123. And so what we're going to be looking for here with FIG is this. We're going to be looking for the day high, which we have no idea what the day high will be just yet. Let's just say the day high is 116, okay? And the opening price is 84. So if between today and tomorrow, this largely cools off and begins to open close to the pivot high, then I can tell you that it's very likely that we would run up to right around 125 to 130 based on the momentum that I'm seeing in this chart. However, if we come back up and we don't quite get to 116, we fall short and it begins to fall again, well, you're going to find that there's a new point of control, and that was the reversal spot here today at around, it looks like at around $99. I'm going to round it up to 100. And if we break that $99 and then we back test it and we fail to hold it, then we're going to come back to $84. Now, I want to be very clear. I'm not predicting any pullback on this. The market's hot. AI is hot. Meta, Microsoft going higher. It looks as if Microsoft is cooling off a bit more than Meta. So even though it jumped, there's clearly some profit taking, which is something else that I heard a lot on CNBC yesterday going into earnings, that people were looking to lock in some gains. There is the expectation that July is typically, out of all the other months, it can be a pretty good month. And then as we move into August, August can be a continuation of that. But August, what's different between July and August is that August has much more volatility. And so you're going to see a lot of rotation and people responding to Q2 earnings, trying to position themselves for Q3 and Q4 earnings for this year. And so I'm expecting August to continue to move up at this moment. I'm expecting August to be relatively bullish, but I'm also expecting an increase in volatility. Tonight's going to be very interesting. Apple and Amazon report. I mentioned in yesterday's video that I saw weakness in Robinhood. It's had an incredible success story. If you count it from its lows of 2023, this thing went up 1,500%. If you count it for just the last 12 months from the low of 12 months ago, it's moved up close to 500%. And I gave the point of control on Hood at $105.50. And I said if it couldn't hold that today, and if it can't hold it Friday, then it's going to be a little bit of a cascading sell-off, and it's going to pull back. But I will warn you that Robinhood has hit institutional investment attention, and we're going to see it pull back, but it's not going to fall into despair kind of a pullback. It's going to fall back to a place where people are going to reload on Robinhood. So Robinhood needs to be on a good position in our watch list, but we want a good price for it. And I outlined those in a previous video, and you'll get more direction on Robinhood in the Stocks with Josh Discord. For now, we're running with FIG, F-I-G, and as it continues to run, we'll run with it. But I want you guys to know that this is a huge and monumental momentum moment. It has gone parabolic from the point of the initial offering to investors, right? This thing was offered out to the investment community to load up on shares at around $33. And then it was brought to the public, and the demand was through the roof, and it shot up to $116. So in this environment where there's high animal spirits, the momentum is hot. Let's see what happens with Apple and Amazon tonight, and see if that continues through, and see if this can continue to climb. We've got to give it the benefit of the doubt, and I gave you the points of control on it. It's going to be around $100, and then the other one is going to be $84. To the downside, we need to be mindful of, and then to the upside, it's got to break $116, and then there's no reason why it won't continue to do what Circle did, which is climb. So let me know what you think. Are you guys holding, buying, investing long, locking in those gains? Let me know what you guys are doing with FIG. If you were able to get a piece of it, congratulations. It had an incredible move. It just shows how hot the market is right now, and there's absolutely no indication that it's cooling off today. But things are getting heated, especially between Washington and Wall Street. I have to comment because it's almost too funny not to comment. Donald Trump came right out, and he did not pull any punches, I think is the term. He's throwing hands verbally with Jerome Fed Powell. He said the man is stupid. That's not nice. He said that he was too angry, too stupid, and too political to do what he needs to do. Well, here's the fact, is that we are going to get interest rate cuts likely in September. And in 8 months, Donald Trump is going to be able to pick his own Fed and put somebody into that position that's probably going to agree to go in there and slash interest rates in an AI-driven economy that's still showing a ton of strength. And so if with this president, with a new Fed, 2026, might not be the recession year that everybody's been calling for ever since 2023. I don't see the mother of all pullbacks in this economy. There is going to be increased moments of volatility. There are going to be moments to buy on a pullback, but there's a lot of reasons why people are not afraid. And I want to remind you of the VIX, right, which is continuing to get lower, and I still think it's a good investment. If you had traded it yesterday on the FOMC news, you made a ton of money, but it quickly cooled off as the markets went higher. Remember, the VIX measures fear in the market, and as soon as Meta and Microsoft crushed it, that fear for a moment went away. But as these things are sitting on highs, that fear is going to come back. And so keep your eye on the VIX. That's all I got for you guys today. Thank you for joining me. Thank you for watching the whole video. Do not miss the next video. These markets are hot and there's life-changing money being made right now. Hit the like and the subscribe and make sure you get the next insight. And definitely pay attention to what I laid out today regarding FIG. You need to remember what POC, that point of control, and respect it, because trust me, Wall Street respects it. And you'll see that if we break 116, this thing's climbing. And if we lose that 100 or even worse, that $84 level, it's going to be falling. Right now, I'm bullish on FIG. Let's see how high it can go. Let me know in the comments where you think it'll go next. Peace and blessings. Take care.